Hello, everyone, and welcome to the Kentucky Small Business Development Center's webinar today. We're glad you're here, and we're going to allow just a few minutes as everybody kind of jumps on. And so in the meantime, we'll like to share a little bit of info about the Kentucky Small Business Development Center. As the only statewide nationally accredited program that provides entrepreneurial and business development services, the Kentucky Small Business Development Center plays a vital role in the Commonwealth's economic development by assisting entrepreneurs at every step of their and stage of their life cycle. For almost 40 years, the Kentucky SBDC has assisted emerging and growing businesses by providing the professional expertise, tools, and information necessary to make sound business decisions in a complex and ever-changing marketplace. We do this at no cost, and that's thanks to the U.S. Small Business Administration, who co-sponsors our program, which is then administered by the University of Kentucky, who partners with other universities, colleges, and local economic development agencies. We're also part of a national network, America's SBDC, with over 1,000 centers across the nation. To learn more about us, please visit kybizhelp.com, and there you'll find additional resources to help fund, start, and grow your business. To request personal assistance, please email us at info@kybizhelp.com or call 1-888-475-7232. Just a little reminder, a recording of today's webinar will be emailed to you later this afternoon with the slides. And if you look to the right of your screen, you'll find the chat feature. If you have any questions for our presenters, you can post them there. We'll answer them at the end of the presentation. So please try that chat feature out right now and kind of say hello and tell me where you're watching from. So it's always good to hear from folks everywhere. I'm Dave Etkin. I am the director of the Louisville Center, and the Louisville Center is one of 13 centers of the network throughout the Commonwealth. And I'd like to welcome our guests. They've been with us a bunch of times. They are our favorite CPAs from Dean Dorton, Erica Horn, and John Wurtenberger. And they are the experts in what is on everyone's mind right now, and that is the Paycheck Protection Program. How do you apply? How do you get your second go at it? So I think we just jump right in here. Hello, Erica. Hello, John.
Hi, Dave.
Hi, Dave, et al. So we're glad, John and I are both glad to be here with you. And when you say we're ready, I can change the slide.
Let's go for it.
All right.
Let's start off, Erica, by just saying experts in air quotes here. As much as you can be an expert in this stuff, right?
That and do we want to be known as PPP experts? So
you do.
John and I joke that he really volunteered. I kind of volunteered. And when guidance comes out in the middle of the night, we rethink that whole slide. So the title of our presentation is the Economic Aid Act, an overview, or PPP loans, here we go again. Both appropriate. There we are. I am not a CPA who prepares tax returns, but a CPA who in normal life works on state and local tax issues for clients, working with departments of revenue to make sure that the client is being treated properly, and with the clients to make sure that they understand and are complying with the law or know the risk if they choose not to. And John, what do you do exactly?
So outside of the Paycheck Protection Program, I'm actually an assurance director with Dean Dorton in our audit practice. And so mainly focus on audits, reviews, compilations, putting together personal financial statements for folks. So you think about kind of those compliance services, but also do business consulting advisory for our clients, help out with whatever issues they have going on. Within our assurance practice, we also specialize in internal audit services. We have outsourced accounting. We have technology services. So lots of other things aside from the compliance, but my day-to-day responsibilities are mainly around assisting clients through their audits, reviews, 401k plans, stuff like that.
Sounds fascinating.
Lots of fun.
Just as fascinating as I'm sure state and local tax sounds to you. So I wouldn't still be licensed as a lawyer if I didn't have a disclaimer in my slide deck. So here is our disclaimer. Don't do anything we say without consulting with somebody about your specific situation. So we're going to talk to you about what we call and what is being called the Economic Aid Act. Included in that act is another round of what they're calling first draw loans, and a few things that are new about those. Perhaps of most interest to you, I'm not sure, would be the second draw loans. If you already have a first draw loan, we're going to spend just a minute on economic injury disaster loan advances and what changed with those, and then let you all start our questions, which you may already be doing. So Dave said just put your questions in the chat box, and we will do our best to answer as many as we can. So most business professionals, such as yourselves, have been waiting for a long time for another round of stimulus dollars. And it took some beyond arm twisting, I think, to get Congress to move. And then, much to our surprise, apparently it took more arm twisting to get former President Trump to sign. Those were an odd 6 days from my perspective, because I had already, John's smarter in the sense that he was waiting for the final bill. I had started looking at a draft, and I'm like, oh no. So you might have heard, so this is part of the appropriations bill, and called the Consolidated Appropriations Act 2021. It's where the federal government says defense is going to get this much money and education is going to get that much money. And you see here in squinchy, small, single line print, it's 2,124 pages. You might have heard that it was 5,000 some odd pages, which in a form that you can read, it is. So it's full of numerous provisions. This the Paycheck Protection Program is in Division N, as in next, Title III. And I just wanted to put the division in there because if you looked at the act and you just went for Title III, you'd find more than one Title III. Using the sense of humor that Congress has, the short title is Economic Aid to Hard-Hit Small Businesses, Nonprofits, and Venues Act. Don't know about you guys, but that certainly qualifies for my definition of short. Specifically, sections 304 through 310 address changes to round one loans, and 311 talks about changes to, introduces a second draw loans. Also in the Consolidated Appropriations Act are lots and lots of other provisions that include highly technical tax changes that neither John nor I are able to talk about. We wouldn't know. We have people who know, so if you need that, just let us know that. Other recovery relief for industries like the airlines, healthcare, universities, colleges, etc. So there is a lot of stuff in those provisions in this huge bill. John, anything to add there?
No, I think you covered it.
Okay. So unlike the first time we did this, SBA has, apparently they've been working ahead of time on this, because they have, in the last, especially 5 days, 6 days, issued a treasure trove of quote unquote guidance on the program. They have issued new borrower loan applications for people applying both the first time and for second draw borrowers. They attempted to put all of those 25, maybe plus IFRs from round one into one IFR, referred to here as the first consolidated IFR. And then there is a second draw IFR. And just yesterday, they came out with a consolidated forgiveness IFR. We're not going to talk very much about forgiveness today because that'll just confuse you. And if it doesn't confuse you, it'll definitely confuse me. The underlined references here are hyperlinks, hopefully, to get you to those documents easily. It'll take you to Treasury's Paycheck Protection Program website. Incredibly, probably two of the most important documents, if not the most important documents, are these how to calculate maximum loan amounts. And so they put out one earlier this week or over the weekend on first draw loans. And as you can see there, it talks about also what documentation to provide by business type, being C, you file a Schedule C as part of your 1040, or an F, or your partnership, or an LLC. And then just a couple days ago, and remember SBA's delight in putting things out like right when John's getting ready to go to bed around midnight. So they came out with a how to calculate maximum loan amounts and what documentation to provide by business type for second draw loans. So that document is very specific and takes you through how to calculate your loan amount. We're going to talk, and there is numerous references to the affiliation rules, and we're going to talk about those. And then we weren't focused on this in the first round, but SBA puts out separate guidance to lenders. And sometimes that guidance is made public and sometimes it's not. Here are 3 of the procedural notices issued by SBA that have been made public. I don't know that there are ones this time that haven't, but I just know in the past there have been. So these talk about what they're going to do about the idle advance. We'll talk about the loan increases. And just really recently, if you got too much money the first time, how that should be corrected. So, John, do you want to talk about what's new for first draw loans?
Yeah, I'll cover this piece. So one of the things too, I know Erica mentioned the forgiveness side of things, and us not spending a lot of time on that during this webinar, but happy to answer questions over forgiveness if people have questions on the back end when we have an opportunity to do some Q&A. One of the things from a guidance perspective that wasn't included on the previous 2 slides, but is out there now, are new revised forgiveness applications. So those were recently released in the past couple of days as well. So you have your standard 3 forgiveness applications like you had previous to the act being enacted. So you still have your full-blown 3508 form, which has your Schedule A. You have your 3508EZ form, and then the 3508S, which we'll talk about here in just a few minutes. But just know that those forgiveness applications have been revised. They are out there. Right now, the banks are in the process of, if they've developed an electronic portal where borrowers could go in and apply for forgiveness, they're in the process of working with those third parties to get those applications updated to conform with the new applications that are out on the treasury.gov site. But the old applications are still out there right now if borrowers want to continue with their forgiveness applications. So it's really at the discretion of the borrower, whether if you're in the middle of applying for forgiveness or thinking about applying for forgiveness in the next couple of days, if you'd like to proceed with the old application or wait for the banks to come up with a new revised application. Just wanted to mention that really quick, Erica, as we think about guidance and what's available.
That's good.
Yeah. All right. Let me figure out how to do this. All right. Next. All right. So what's new for first draw PPP loans? So as Erica mentioned, the Act covered changes to first draw loans and then introduced the second draw loan. So we'll cover first draw loans first and what changed. And really these next few slides are meant to cover kind of the main highlights. There might be other minute details associated with the first draw loans that changed within the Act, but we really tried to summarize what we thought would be top of mind for borrowers and for the audience. So first and foremost, the program end date was extended to March 31st, 2021. So previously it had an end date of December 31st, 2020. So extended it by 3 months. If you recall, the last date to apply for a round one PPP loan was, I believe, August 8th. Is that right, Erica? 2020?
That is right.
And then the program had an end date of December 31st. So, since the new act has been passed, the Economic Aid Act, they have reopened applications for first draw loans, and the end date as it stands right now for borrowers to apply and receive a loan is going to be March 31st, 2021. Whether they extend that or not kind of remains to be seen, but that's where it stands right now. The Economic Aid Act brought on new borrowers, eligibility for new borrowers, which were previously ineligible or maybe just not quite defined for the first draw program. Those being housing cooperatives, destination marketing organizations, 501c6 organizations, and then news organizations as well. So each one of those is very detailed in the definition of what those organizations are and what they are not within the Act. So if you fall into one of those categories and you have questions over your eligibility, let us know. Happy to take a look at that for you and assist you. But now there's new borrowers that can go back and apply for a first draw loan.
So, John, let me ask you, do you think there's going to be, or have you seen evidence of a run on the bank for this round like we did at the very beginning?
I haven't at this point in my conversations with banks and borrowers. There are certain people that have come up and said, hey, I didn't get a first draw loan. We've had some 501c6 organizations reach out to us and ask for help and say, hey, I'm eligible now. Can you walk me through this? Can you answer some questions for me? I haven't had any housing cooperatives or destination marketing organizations or news organizations reach out for assistance. So I think that the bulk that I've seen is within the 501c6 organizations, and then those few and far between borrowers that maybe didn't get a round one loan, which were previously eligible, that just wanted to wait and see, or have even had some people who accidentally got an SBA economic injury disaster loan and meant to get a PPP loan and are saying, can I go back and now get a PPP loan? So I'm not seeing the huge rush by the borrowers like everybody was back in April 2020 when this thing was first up and running, and they were saying, okay, borrowers can apply, on April 3rd and April 10th, like we were the first time. I don't know if you've seen anything different, Erica.
Yeah, no, I know that for both programs, I think the appropriation is about 187 billion, 186 billion. The window was open first to lenders that didn't have the access. With this, when they reopened the first round of loans, all of the money that was appropriated at that time wasn't applied for. So I've been a little curious about it. Are 501c3s still eligible, and what about 501c everybody else?
I don't know about 501c everybody else. Honestly, if you're not listed, then I would say no, you're not eligible. If you're not specifically called out, they haven't done a broad general rule that says, hey, 501c's, everyone is eligible. But the existing eligible entities that were, under the CARES Act and defined subsequently, all those entities are still eligible. It's just that they added these new borrowers as well with the Economic Aid Act.
Got it.
So aside from the new borrower eligibility, there's also a new definition for the covered period. And quite honestly, some people were doing this already. Some people weren't, because the SBA had come out and said that borrowers could apply early before the end of their 24-week period. But technically, when you went to go fill out that application, the covered period was defined as either an 8-week or a 24-week period. This new act basically gave borrowers the ability to choose an end date of their covered period between 8 weeks and 24 weeks. So the start date remains the same. The start date is going to be whenever you received your loan proceeds from the bank, whenever those proceeds hit your bank account. But your end date, you have flexibility in choosing really any date between 8 weeks from the date that you received your loan, or a maximum of 24 weeks from the date that you received your loan. So that may help borrowers when they're going to fill out their applications. That's one of the things that will be changing. And then on the back end, the documentation requirements associated with that. So you think about borrowers that maybe had to submit FTE calculations at the end of their covered period. Well, now they can do that at the date that they so choose, instead of having to wait until that 24-week end date or that 8-week end date to submit that and calculate those FTEs. In addition, they actually, with that flexibility to choose the end date of your covered period, they took away the alternative covered period. So the alternative covered period was introduced really as an administrative convenience by the SBA to allow borrowers to line up their payroll runs when calculating payroll costs for the covered period under first draw loans. So there's no more alternative covered period. So if you were using an alternative covered period for payroll, and haven't applied for forgiveness, just keep in mind that you're going to need to revert back to the covered period that starts on the date that you received your loan, and then the end date of whatever you choose between 8 and 24 weeks.
So John, could I choose, so even though my covered period starts on the date of disbursement, could I include in my forgiveness app instead just start with the payroll that could I basically do my own alternative covered period just by choosing which payrolls I'm going to do?
You could choose which payrolls you want to include as eligible forgiveness cost. And so say you didn't want to take the first payroll that was paid out right after you received your loan proceeds, because that related to a period prior to your loan, even though you can do that. But you just wanted to take the first payroll that started after you received your loan proceeds and include that going forward. You could definitely choose which payrolls you want to include in your loan application for forgiveness for eligible cost. But your covered period, the definition, the date that you put on your loan application, that start date has to be the date that you received your loan proceeds.
Okay, got it.
All right, so what else is new? Aside from the expanded borrower eligibility, they also introduced expanded allowable and eligible expenditures that borrowers could use their PPP loan proceeds for. So previously, if you think back, that was limited to payroll costs, utilities, interest on mortgage or secured debt, rent payments. Now they've expanded that and also brought into to the fold operational cost, property damage cost, supplier cost for essential supplies during the covered period, and worker protection expenses. So again, similar to those housing cooperatives, destination marketing organizations, those definitions, there are very clearly defined definitions of what these costs are included in the bill. So the operational cost, it really relates to software technology utilized to facilitate operations, property damage cost, stuff that, property that's been damaged as a result of public disturbance during the covered period that wasn't covered by an insurance claim, supplier costs for essential supplies during the covered period, or perishable supplies during the covered period that were under a purchase order or a contract that existed prior to the covered period. And then those worker protection expenses, you think about masks, those plexiglass guards as examples, stuff that you had to purchase to either comply with COVID-19 restrictions that were being put out, mask mandates, that type of thing, or just to make your workplace more safe for your employees who were operating, or working in your workplace. So all of those are now eligible expenses, both allowable and forgivable costs. And so again, when you think about the forgiveness applications that are that are out there, those revised ones incorporate these new expanded costs, but the ones that your bank might have available right now may not have included those until they have a chance to revise them.
And you would have had to have spent your money on those things during your covered period. You can't.
That's right.
Yeah, you can't. Yeah.
That's right. For those that have already gotten a first draw loan, Erica's exactly right. You would have had to spend your money, and those operational costs and some of the supplier costs, and quite honestly, people were probably spending the money anyways if they were still operating their business on some of those things. But Erica's right. You would have had to incur those during your covered period if you previously got a first draw loan. For those people who are still seeking to get a first draw loan, you can now use those on those costs going forward once you receive your loan proceeds. The big thing down here at the bottom, tax deductibility. So this was one thing that everybody was really hopeful for, that it wasn't, exactly what people wanted when the CARES Act was first introduced. They first came out and said that the expenses that you're spending your loan proceeds on would not be deductible for your federal tax return purposes. That was, a sticking point for a lot of people as they were going towards their forgiveness applications and towards year end. This bill reversed that and essentially said that your expenses that you're using your PPP loan proceeds for are now deductible for federal tax return purposes. If you apply for forgiveness and you receive forgiveness, that forgiveness amount is not included in gross income for federal returns. And federal returns is key here. And I'm really glad, Erica, when we were prepping this slide deck, that Erica put this in here, because state by state may differ. And the states don't always follow federal rules from a tax return perspective. So while for federal purposes, they might say, hey, you can go ahead and deduct those expenses on your federal tax return. The state of Kentucky has said, I guess, and has said that we're not going to allow you to deduct them. So they're going to be taxable income for you for the 2020 calendar year. And so that might result in a difference in the tax that you're paying for Kentucky versus the tax that you're paying for federal. Is that right, Erica?
Well, yeah, I mean, it is a different treatment. And there is a movement, we would call it, in the General Assembly to make these expenses deductible. As of last Friday, the cost of that legislation, how much money Kentucky would lose as a result of that policy decision, hadn't been quantified. And often, as you can well imagine, those things have an impact on whether or not legislation goes forward or passes. So that's out there in the wings. Next door in Indiana, they said, yeah, you can deduct it. Now, all of this, guys and gals, is subject to change at any given moment by executive action or, in Kentucky, legislative action. But that's the current state of affairs.
So, key point, monitor that going forward, especially for those borrowers that you all may file in different states. Make sure you're aware of that. Make sure you're looking at that state-by-state guidance and complying with that guidance that's in effect when you're going to file your tax return. All right, simplified loan forgiveness. So I mentioned the Form 3508 previously, and I told you that we would talk about that a little bit. With the new Economic Aid Act, it introduced a simplified loan forgiveness process for borrowers who received a loan amount of $150,000 or less. In the act itself, it said that there would be a one-page certification that would be released after a defined period of time. We were waiting on that and finally got that a couple of days ago. So they actually just revised the previous 3508S form that was out there before the act was enacted. So probably, I don't know the exact date, but maybe back in, I don't know if it was November or December, Erica, or maybe even, it might have been around that time frame, because I think it was later, they released this Form 3508S forgiveness application. And it was meant initially for borrowers who had received a loan amount of $50,000 or less. And so it was out there. It was a very simplified process. And it didn't require really much beyond somebody just certifying to the good faith certifications that they spent the loan proceeds on valid uses. but they have now revised that 3508S form to incorporate this simplified forgiveness process for loans amount of $150,000 or less. So what that is, it's essentially just a one-page certification. It asks the borrower for some basic information around, their general business information, the number of employees that they were able to retain as a result of the loan, their estimated payroll cost that they spent with the loan proceeds, and then also the total loan amount. And really that's it, aside from the good faith certifications. So, some other advantages to using this new 3508S form. There's really no documentation requirements that a borrower needs to submit along with the application. So you think about bank statements, payroll reports, Form 941, tax filings, anything related to utilities, rent, mortgage, those non-payroll costs. A borrower doesn't have to submit any of that if they're using this 3508S form. Really, all they're filling out and submitting is the one-page certification, and that's it. The use of that form, just to make sure that everybody's aware, it does not alleviate you of potential audit or review exposure by the SBA. The SBA has made it clear that they can still come in and review any loan size at any time they want to. So just because you're using this new simplified loan process, that doesn't mean that the SBA is not going to come back and ask you for documentation or potentially challenge you going forward. But that they did change the documentation requirements for people who are using this form and how long people need to retain documentation. So if I remember correctly, I think if it's, and Erica, let me know if I misspeak here, but if it's documentation related to payroll, a borrower needs to retain that for a period of 4 years.
I think that's right. 4 years for payroll.
All other documentation a borrower needs to retain for 3 years. So if you're using the other 3508 forms, either the 3508 or the 3508EZ to submit your application for forgiveness, the timeline for documentation retention is still the same. It's still up to 6 years. But for those people that are using 3508S, that has been reduced to payroll documentation to 4 years and all other documentation for 3 years. And then another thing that the Act introduced related to first draw loans is the ability for a borrower to go back and apply now for an increase in their round one or first draw amount if they meet certain criteria. And so there were a lot of questions on this on the front end, and this is one of those things that Erica had mentioned when you look at the lender guidance that has been issued, that they've really kind of, issued some guidance and some stipulations and examples in that lender guidance. And that's helpful out there right now. But the types of borrowers that can go back and apply for a round one increase are really limited to those that did not initially accept their full amount. So if you applied for a first draw loan, say you applied for a loan size of $500,000, you were approved for a loan of $500,000, and you said, XYZ Bank, I know I was approved for $500,000. I really only want $400,000. And you took $400,000. That would put you in this category of being able to now go back and apply for that incremental loan approval amount of $100,000 between that $500 and that $400. Similarly, borrowers that returned a portion of the round one loan. So again, using that same example, say you got approved for $500,000, you took $500,000. Once you took it, you said, I don't know that I really need $500,000. I'm going to give $100,000 back. You can go back now and you can apply for that incremental $100,000. And then the third category is those that really kind of resulted from changes in subsequent IFRs. So your loan size may have been increased from additional guidance that was released beyond what was available at that time. And what that really relates to, Erica, is those seasonal employers and then partnerships. So, initially they had put out some guidance around partnerships and who should be included in those partnership applications, as well as a defined period for seasonal borrowers to choose from. Those subsequent IFRs changed that guidance and may have allowed borrowers to apply for an increased loan size than what they originally applied for. And so if you're in one of those categories, you can. And we are getting questions too, just to chime in, in some circumstances, people have reached out to us and said, hey, I didn't include all the payroll costs that I should have on my round one loan. or I might have messed up on the calculation. Can I go back and include? The bank really had to go and apply for a loan with the SBA and get that approved in the SBA's E-Tran system for a loan amount in excess of what you actually received in order to go back and apply for that incremental value. So, if there was an error on your application, you initially calculated your loan amount to be $250,000 and it should have been $300,000, but the bank went and applied for $250,000 and you got $250,000. In that situation, I think unfortunately you're just kind of out of luck and you can't go back and apply for an increased loan size. Is that your understanding, Erica?
It is.
Okay.
Right on.
All right. So those are the big changes related to first draw loans. And like I said, there might be other smaller changes in there as well. There's definitely some stuff to highlight in the forgiveness section when you think about second draw and first draw and some of those dates that got amended. But those are the main points. So second draw loans, we're going to spend a little bit of time on this, and then we'll open it up for some Q&A here shortly. So second draw loans, it's a new SBA 7A loan. It is forgivable. So, and it's available to borrowers who meet the following criteria. Essentially, they've reduced that employee threshold that related to the first draw loans from 500 to 300. So if you're going to go and apply for a second draw loan, it's no more than 300 borrowers. They also implemented this quarter-over-quarter revenue reduction or gross receipts reduction of 25% or greater. So they basically have said that if you're going to apply and be eligible for a second draw loan, you need to have had or have experienced a quarter over quarter when you're comparing 2020 versus 2019 revenue reduction or gross receipts reduction of 25% or greater. Now, that doesn't mean that you have to do that in every quarter in 2020 versus 2019. Just one is what they've come out and said. So that was an initial question. We weren't sure exactly how they were going to treat a situation where a borrower might have experienced a revenue reduction of 50% in one quarter and then an increase of 75% or 80% in the next quarter. But they've made it quite clear that it's really just a 1 quarter reduction of 25% or greater. And that's what they're asking for on the application itself for the second draw loans. They just have a box that says, what was your quarter? What was that, that 2020 quarter amount? What was the 2019 quarter amount? And then they ask you to provide documentation to substantiate that revenue decline or that gross receipts decline. And then also you need a borrower has to have received a round one or first draw PPP loan and then have used or will use the full amount of that round one loan before the disbursement date of the second draw loan. So if you haven't applied for a first draw loan and you want to say, hey, let me just go apply for a second draw, unfortunately, you need to apply for a first draw loan first, get that loan, use those loan proceeds, and then go apply for a second draw loan. In the new IFR guidance around forgiveness, I think, that was just released a couple days ago, they actually said that borrowers who are seeking to apply for a second draw loan that would be in excess of $150,000 need to submit their first draw forgiveness application prior to applying for a second draw loan. So if you haven't applied for forgiveness of your first draw loan and your second draw loan is calculated out to be $150,000 or more, you need to make sure that you're applying for forgiveness for that first draw loan before going and applying for your second draw loan. The second draw loans also expanded. I don't know if it really expanded, maybe clarified, but maybe in certain circumstances expanded in uneligible entities that would not be eligible for a second draw loan. It really includes those with affiliated ties to China or Hong Kong. People who board members who are from those territories or ownership restrictions associated with those territories. There's also they put some criteria on lobbying activities and the significance of those for those 501c6 organizations that may make them ineligible. And then they also, which I think was really no surprise to everybody, but made public entities that are listed ineligible to receive new loans going forward. There was a lot of noise about that, if you recall, initially when people were applying for first draw loans. Oh, the LA Lakers got a loan, or these big restaurant chains that are public entities got loans, and so that really kicked off the defined period where people had the opportunity to return those first draw loans, as well as the Treasury Secretary saying that, hey, we're going to review everybody over $2 million. That was kind of like his, off the cuff remark that is now, they're having to actually review all these loans. But that was one of his responses to people who received those larger loan sizes, that they were going to review everybody. All right, so a lot of questions around this when you're calculating that quarter over quarter gross receipts or revenue reduction. What does that mean? How is that defined? What revenue to include? What gross receipts to include? So honestly, there was a pretty clear definition for-profit entities around this. The nonprofit entities was very murky and very hard to find based upon the reference that they included in the act itself. But the new IFR that came out actually clarified this and cleaned this up for everybody. So the gross receipts definition for-profit entities is found on the slide. Some things just to keep in mind is that it really doesn't include taxes collected for and remitted to a taxing authority if it's already included in the gross or total income. It doesn't include amounts collected for another by a travel agent, real estate agent, advertising agent, and it doesn't include proceeds from transactions between a business concern and its domestic or foreign affiliate. So think about those, what you might classify as intercompany transactions. If you have affiliated entities and maybe they have transactions between each other for lease agreements or supply agreements or something like that, those transactions are going to be excluded from the gross receipts for that affiliated group. And then the nonprofit, which I think everybody was really glad that they clarified this. It lists out what would be included, even though it's not limited to, but what would be included in gross amounts for gross receipts, and that includes contributions, gifts, grants, similar amounts, dues or assessments, amounts received from the sale of assets. These are all kind of the gross amounts. And so if you think about it, without reduction of the corresponding expenses on the slide there, let me give you an example of that. So the gross amount received from the sale of assets, that would be, if you sold an asset for $100,000, that would be that $100,000. It would not include any expenses related to selling that asset. So if you had to spend, I don't know, what, $20,000 or so of you incurred expense to sell that asset, it wouldn't be that $80,000 amount. It wouldn't be the net amount that you're receiving. It would be the gross amount. And that really is true for each one of those line items. It's the gross amount without consideration of any other expenses that you may have incurred. I just talked for a really long time, Erica, and I probably babbled quite a bit, and I apologize. So now you've got 17 minutes to go through the slides that you need to go through, as well as some Q&A. So best of luck.
No problem. You weren't babbling either. On those gross receipts definitions, so they come into play when you're trying to figure out whether or not you had a 25% revenue reduction. The combination, the for-profit and the not-for-profit definitions are quite different. How they decided what to include and what to exclude is a little bit of a mystery to me. So pay special attention to those calculations. Also, in the document we were talking about, the documents we were talking about earlier, one of them is how to calculate your revenue reduction. It gives you some very specific information about it. You can use quarterly financial statements if you have them. You can use your actual bank statements, or you can use your tax return. If you use your tax return, that can be very tricky business. And your tax return basically has to be your 2020 tax return. You would compare it to your 2019 is what they're saying. And your 2020 tax return has to be finished. Well, it's January 21st, and I don't know how many of our clients have had their returns finished, You don't even get all your W-2s, 1099s, and all that stuff until the 31st, and other things by February 28th. So there's a little bit of a disconnect. So you will want to use, if you have quarterly financial statements, those. If not, just add up your receipts or your deposits on your bank statements, use those. Because the tax return, even though it was supposed to be convenient for borrowers who didn't have financial statements, is really not convenient at all. Like first draw loans, you have to spend at least 60% of your total loan amount on payroll costs. If you don't, your forgiveness will be reduced proportionately. The loan size, again, is 2.5 times your average monthly payroll costs. And you can use 2019 or you can use 2020 payroll costs. If you use 2019, you go through the same lender you went through the first time. You're supposed to not have to submit all that documentation all over again, so that could be advantageous. You're capped at $2 million. If you are an NAICS 72 entity, which is people in the accommodations and restaurant industry, you can get 3.5 times as opposed to 2.5 times of your average monthly payroll cost. And for those folks, they absolutely want to use 19 because they unfortunately didn't have very much payroll in 2020, which is part of what's going on here in terms of what we're trying to fix. Also, lesson learned from round one was if you put a whole bunch of affiliates together, you can suddenly get a group that gets all kinds of money. I think somebody last time got maybe $20 million or something. So SBA did come in and create a limit midway through the first of the first round. And so they have put a corporate group threshold here too. And I think it's is it 4 million, John?
Yes, that's correct. Yep, it's 4 million.
I couldn't remember. There's once again how to calculate your loan amount. There's a page on that. The other pretty significant change, actually, and this could have been in the first draw slides as well as here, is that a lot of farmers don't have net income, and the directions were that you could only get a loan amount if you had net income, and you got 2.5 times that net income. So the appropriate professional or lobbying organizations explained that to enough people that farmers and ranchers, as they are called in some parts of the country, are now allowed to use gross receipts or gross income instead of their net income. It will still, if you're an owner with compensation in excess of $100,000, it'll still at $100. But at least it gives you that when you got nothing in the previous round. So all of the loan programs require that you were in business as of February 15th, 2020. And so that kind of runs throughout. Because of this change, farmers and ranchers can request an increase in their first draw loan. We've had lots of questions about that. Again, there is a discussion of that in the how to calculate revenue reduction and maximum loan amounts and what documentation to use, etc. document. I mentioned the economic injury disaster loan advances at the beginning. So you will remember that with the CARES Act came an opportunity to get what we thought was free money. $10,000 is the way it started, and later on it turned out to be $1,000 per employee because they ran out of money. And it was misunderstood, I think. It was misunderstood by me, at least initially, that $10,000 would be forgiven. In actuality, the $10,000 was deducted from the amount of loan forgiveness that you were allowed on your PPP loan. So you were going to end up with whatever amount of EIDL, idle advance, that you received as something that you had to pay back. That was repealed in the Economic Aid Act, so that now you don't have that is not deducted. You do not have to pay that back. SBA told the banks, basically, we'll take care of it, and we'll go back. We know all those. We know those people. We know those amounts. If you had a $10,000 loan and you've applied for forgiveness and your forgiveness was granted, the bank sent you a letter saying, okay, well, you still owe this $10,000, so start paying us this much over this amount of time. And maybe you've even made a payment or two. SBA is going to send to the bank the amount, the $10,000 plus accrued interest. The bank is required to turn around and return to you your payments that you've already made plus interest. If there's a new round of idle advances, if someone is eligible, SBA, I think in the first round they had 3 days, John, to make a decision. Now they have 3 weeks, and they have to provide you notice if you don't qualify. And you don't have to treat idle advances as gross income for purposes for tax purposes. The canceled debt. So
that information from an economic injury disaster loan perspective has actually been removed from the loan forgiveness application. So you think about, there was a box or a line where borrowers had to submit, what their amount was or what their advance amount was. That's no longer there.
Super. One less line on the forgiveness application is a good thing. So, Dave, I'm sure that everybody's perfectly good now, and there are no questions.
That's exactly right. Everybody's so happy and they're ready just to go forward. But wait. Let me start with this question. When the bank processes these PPP loans, I mean, there are, the bank gets paid by the SBA. Does the SBA add those loan fees or those payments to the bank on top of your loan?
No.
Okay. So they don't show up anywhere.
That's right. That's between the SBA and the lender.
Okay. That's awesome. All right. So let's jump right in here.
If the bank is adding loan fees back to your balance, you may want to have a conversation with the bank about that.
Okay.
And a lawyer.
Right. So Ann wants to know if you can kind of clarify some definitions: covered operations expenditures and covered suppliers costs. Is there definitions anywhere, or what's your insight on that?
There are definitions. There are definitely definitions. They are a little bit lengthy. So that's why we didn't include them on the actual slide itself. But for the operation stuff, and again, Erica, you can keep me honest here, make sure I'm going to try to summarize. But operation stuff is like for software technology that is used to facilitate operations of your business, whether that be accounting or just transactional or supplier or processing invoices, stuff like that, just to keep your business up and running. It's kind of limited to software and technology costs, I believe, Erica, if that's correct. The supplier cost is more around if you purchased essential supplies during the covered period, or if you purchased perishable supplies. So think about like the restaurant industry having to purchase food that might not be good for the whole time. And those supply expense related to a purchase order or a contract that existed on or before the covered period. So if somebody was previously obligated to purchase those supplies and then went ahead and purchased those supplies during the covered period that were essential during the business, that's what that's defined as.
Okay, cool.
Yeah, if you click on one of those links, you'll find that definition.
Okay.
Definitions.
Linda says, I'm self-employed, small business owner for 1.5 years. I'm under the impression that I can apply for the first draw PPP loan. She didn't apply last time until her tax person said that she could not. Please advise.
Yeah, Linda, if you were in business February 15th, 2020, you can apply. And in that how to calculate your loan amount document, it tells you exactly if you were only in business for 2 months, if that was January and February of 2020, what to do. So that's not correct.
Yeah, I would just make sure that you had income. If you're self-employed and for some reason you were showing a net loss or something like that, you may be eligible to apply, but your loan amount's going to be zero because they base it off of income or payroll paid. So just make sure you have income in that scenario.
Or payroll.
That's a good point. So Robin asked if she says she miscalculated the first amount for the first draw of PPP. Is there a way to make a correction and still apply for the second draw? When do we apply for forgiveness, before or after we are able to apply for the first and second PPP?
So if you miscalculated, I think unfortunately you're probably in that bucket that I talked about earlier, where you can't go back and apply for an increased loan size, unless for some reason your bank applied for an increased loan size beyond what you actually got. And then from just a forgiveness, when do you apply perspective, you can apply for forgiveness up until the maturity date of your loan, but the principal and interest payments don't kick in, and that deferral period ends 10 months after the end date of your covered period of the loan, or whenever the SBA issues a forgiveness decision on your loan itself, the earlier of those two periods.
Okay. So we kind of covered this, but maybe we'll go over it one more time. But Keith wants to know, to qualify and receive forgiveness, do I have to show a loss in revenue, receipts, gross receipts, income, or what?
Yeah, that reduction in revenue and gross receipts, just keep in mind that only relates to eligibility to apply for a second draw loan. Has no bearing on forgiveness and does not apply at all to first draw loans. Only eligibility for second draw loans.
Okay. Becky's got a good question. Hey, Becky, how are you? She wants to know, what is the percent required to payroll expenses versus operational costs? In the past, it was 60-40. Has that changed?
No, that hasn't changed. That's the same.
Okay, good. For Kentucky income tax, if expenses are not tax deductible, is the PPP forgiveness also taxable? That would be double tax.
It's not taxable. It's not. If you get forgiveness on the loan, it's not included in gross income.
Okay. So Cynthia asks, she says she was denied the PPP loan last year because we launched our business 2 days after the February 15th business creation requirement. Is that a requirement still in place? I guess we answered that before. Had to be in business before 2/15/20. So she's still not able to apply for this again, right?
That is a bummer.
Yeah, it is a bummer. Yeah. So Wilson asks, do we have to wait to have the first PPP application forgiven prior to applying for the second draw?
No, that's kind of interesting. I was on a call this morning, and somebody told me that they were hearing that the banks had received notification from the SBA that they were pushing second draw loans back if a borrower hadn't received forgiveness yet. I think that's incorrect. The guidance that's out there for those $150,000 or greater loan sizes that I mentioned, that you have to apply for forgiveness if you're seeking a second draw loan in excess of $150,000, but you don't have to have received forgiveness. And if you actually think about the timeline that a lender and the SBA have to review your loan application and submit that back to you, it can be up to 150 days that they have. And so if that's the case, people may not even be able to apply before the end date of March 31st, 2021. So I don't think that's correct.
Yeah. Okay. So Tim says that he is very glad to see you two back and that you guys are doing a great job. Pam asks, she said she's a seasonal business and applied using 12 months of wages to calculate our first draw loan monthly average because it was not clear how to calculate the monthly average for seasonal businesses. Using the new methodology, we would receive a larger loan. Can we apply for a first draw increase because of that amount?
I think the answer to that is yes.
I agree.
I guess there's no downside to taking another swing at it, is there? I mean, all they can do is say no.
Yeah.
Amanda says, thank you for this. And her question is, can a NAICS 72 entity that is also a seasonal business get the 3.5x multiplier, or can you not be both 72 NAICS entity and calculate as a seasonal business?
Yeah, I don't know that there's any prohibition. I don't know that there's anything to keep you from using 3.5, even though you're seasonal. Right, John?
I agree with that. Yep. Yep. If you're NAICS 72, I would think that you would qualify for 3.5, regardless of whether you're seasonal or not.
Okay. Kevin asks, he says, you mentioned that forgiveness for PPP must be applied for prior to getting a PPP2 loan. When was this determined and released? He says he submitted his PPP application to his lender last Thursday and was told that it didn't have to apply for forgiveness on the first round yet.
So that just came out 2 days ago in the guidance on the 19th. So how they're going to put that in practice, the SBA, I don't know if they've approved Kevin's loan or not yet, but they may be holding on to that, and they may come back and say, hey, we want to see your forgiveness application if that second draw loan application is in excess of $150,000. I'm not sure.
All right, let's see. So outside the calendar year, you can use the last 12 months, for example, apply on February and use February 2020 and use 2021 numbers.
If you're really good at estimating, because technically they say that you can either use 2020 or 2019, or you can use the 1 year period beginning on right before you receive your second draw loan or your first draw loan. And so if you can estimate when you're going to get that loan dispersed and use that 1 year period on your loan application when you're submitting it in advance, then I guess, yes, you could.
Yeah, that's a little awkward, isn't it?
It is very. Larry says he's a restaurant owner and he used the 2.5 times method in the first PPP. For the second draw, he can use the 3.5 times, or must I use the same rate as last time?
No, you can use the 3.5. There's nothing to hold you to the 2.5.
Let's see here. My bank is adding to our PPP an interest rate of 1%. Of our original amount was a couple $100,000. Our current amount shows, it's an increase with interest of about $1,400 being accrued on that. Is that allowable?
Yeah, it'll be forgiven when your loan is forgiven. The accrued interest will be forgiven, but the loans do accrue interest, and the rate is 1%.
I see. Yeah, and that's part of what I asked you first was the SBA will cover those costs on the forgiveness portion to pay the bank their fees and interest that they're holding costs. Okay, great. Can a PPP first PPP round recipient now take an employer tax credit for wages paid for COVID time off?
Maybe.
I like those answers.
So the law says yes. The law says that if you were So in the initial law in the CARES Act, you cannot take an employer retention credit and a PPP loan. So in the Economic Aid Act, they said scratch that. You can do both. You cannot use the same wage base. Okay, that makes sense. You can't double dip. It said you can go back and do 2020. You can go back and pick up 2020, or you can do 2021. The rules for 2020 are, John, check me on this, but you have to have a gross receipts reduction of 50%, and not have exceeded 80%, not have recovered basically up to 80%. And there's lots of these things are complicated, lots and lots and lots of rules. Well, the problem with the going back to 2020 is nobody knows how. The IRS has not yet said how it is that is supposed to work, whether or not you were supposed to take it on your 941 that's due any moment now, or whether or not you're supposed to go back and amend 941s for the period in which the credit would have applied. And so until the service issues a regulation on how that's going to work, that's something that we haven't figured out. The other thing that we don't know is we encouraged our clients to use more payroll than was necessary, just to make the forgiveness process easier. Less for SBA to review, less for the bank to review, less to get documentation to upload. So we might have said, just base your loan application 100% on payroll cost. Well, if they had done the 60-40 thing, then those would have been less wages that would be tied up with a PPP loan. We don't know how that 60-40 is going to be treated. I know that the AICPA is advocating that borrowers be allowed to be treated. Well, actually, I don't know exactly, John, how they're going to do it, how they are suggesting that be done, but they are suggesting that they be allowed to, if they met the 60-40 requirement, to pick up that amount and not have the payroll wages count against them. We'll just have to wait and see.
Yeah. Mm-hmm. Yeah. Another one of the interim financial or final rules that'll pop up at some time. On the first PPP, since my husband is a dentist and makes more than the maximum amount they deducted his salary, we were later told that up to a certain dollar amount he could have claimed. Is this true? And if so, can it be applied to the second draw loan? It's a little cryptic there, but.
I think what they're referring to there, if I understood correctly, is a scenario where you're applying for a loan. You can only apply, and the payroll costs are capped at $100,000, essentially your income if you're a self-employed individual. So if you have somebody who's making $150,000, they're going to be capped at $100,000 when calculating that payroll amount. Mm-hmm. And that additional $50,000 doesn't roll into a second draw loan or anything like that. Each time you're applying for one of these loans, any payroll is capped at $100,000. I hope that answers the question.
Okay. Connie wants to know, is it better to go through the SBA or an accountant? My accountant does not seem to know the up-to-date info yet.
Good luck going to the SBA.
Yeah.
And getting any contact information there.
I'm going to let you say that.
Yeah, I would go through your accountant or a lender, and if your accountant doesn't seem to know the information, happy to answer questions for you. Reach out to us; we can assist. But the lender, more often than not, is going to defer unless it's a very black and white answer to a financial advisor or an accountant.
Tony, if a borrower received more than they should have on their first draw, how can this be corrected or forgiven?
Yeah. So SBA just issued, I think in the last couple of days, a notice, procedural notice to lenders saying if someone got the excess loan amount, here's what you, or there was an error in the calculation and they got excess, here's what you do. So you need to reach out to your bank on that one.
Okay. Let's see. Let's take a couple more here, but we'll getting a little over our time. See, Russ says, what can we use as income from our Schedule C? Once we take depreciation, our net P&L is negative. Can we only use the line 31 on Schedule C for income for owners?
It is line 31 on your Schedule C that you use, but I thought that line was after depreciation, but I may be mistaken.
Yeah. It's whatever line 31 is on the Schedule C. And if that's a loss, then unfortunately, that's what they're going off of to base the PPP loan amounts off of. So you need to have an income amount in that line 31.
Unless you're a farmer.
Unless you're a farmer.
Okay. Tiffany asks, can 1099 independent contractors be used in calculating payroll cost?
No.
They need to apply on their own.
Correct.
Okay. Yep. Let's see. Can our restaurant monthly sales tax returns be used as proof of revenue reduction for PPP2?
Yes, I think is the answer to that. I would do a calculation. So your gross receipts on your sales tax return includes the sales tax. As long as you're comparing apples and apples, I don't think it matters. The rules say you don't have to include the sales tax. But yes, if that sounds like a great approach to me, frankly.
I will say on that too, that, I mean, the SBA has put out guidance as far as what they would expect as far as supporting documentation to substantiate a decline, but that may also depend on the lenders and what they want to see. So I would make sure that you're coordinating with your lender and understanding exactly what they're looking for there too.
Well, the other thing is you can always just take the information from your sales tax return, put it on a piece of paper, make your own little financial statement, quarterly financial statement. You would have your sales tax return as your backup. Also, your bank statements probably show that same decline in receipts, and those are specifically listed as something that you can use. So you might go that route.
Yeah. Well, I think that's all the time we have. There's a couple other questions, but we'll try to get those answers for you folks later, and we'll reach out to you. But Erica, John, I can't thank you guys enough for coming and talking about this again. You know, it's the first time we got together and met, I thought we would all be wrapped up last June, you know, and things be back to normal again. And here we are in January. We're still talking about all this stuff. So I know it's been rough on you guys. I really appreciate everything you do, and you guys are a great resource. So thank you for coming and sharing today.
Happy to help.
Yeah, of course.
Right, and there's the contact info. Like I said, we'll send you everyone the recording and the slides that have lab links. You can download some of those documents, and feel free to reach out to John and Erica. They are great, and you can reach out to us as well. We're at kspdc.org. We'd be glad to help if we can. We're not as smart as John and Erica, but we do the best we can. So. Well, with that, I guess we'll call it a day. Thanks, everybody, for joining, and we'll see you soon. And have a good day. Have a good Thursday, everyone.
Thanks.
Thanks, everyone.